Hello? Mic check, mic check. We just muted the whole time.
Hello?
Oh, yeah, we were muted the whole time. Okay, guys. Well, now that we're live here, we were chatting a little bit, but not a whole lot. What's going on, Mo? What's going on, Dawes? Oh,
Okay, guys.
Cool. Perfect. All right. So, yeah, as we were saying, we have Jordan here. We're just going to be going over the year that was. We're going to answer some of your guys' questions. Go over kind of, his year, my year, ups, downs, and, basically what's going on 19 Birdie, what's going on Callum, and basically just go over kind of everything on the year. So we'll kind of let Jordan get started. An introduction. Say hello to everyone.
Hello.
And so, yeah.
It's been a while. It's been like 9 months.
Yeah, it's been...
Since March.
Is that when we did it last time?
Yeah.
We did it in March, so we're doing it like... We're nipping the butt quick.
Yeah.
What made us wait so long, do you know?
I don't know. The next milestone's 10 mil, so it's like...
Yeah.
Not there yet.
Right. Yeah, so... I don't know. So basically, for me, as the year started, I started off real hot and things started to taper, and we kind of talk about that a lot. But for you, it seems like you just kind of, we know each other very well, obviously, over the years, and so. But for me, I got to talk to you in a perspective that people don't know you. But you kind of like trade just like sharp, right? Like you're never gonna have a big red day, nor will you have a huge green day, and that's just kind of how you've been consistently working yourself. And so that's saved you over the past 7 months while I've been just freaking lollygagging. And I don't know, what are some of the things that you kind of learned over 2021 and just kind of some of the basics that the ups and downs that you went through and some of the goals that you might be looking forward to 2022?
Yeah. 2021, like the goal was 2 mil for the year. So it was, it felt good to achieve that. As far as like kind of the base hit mentality, January and February and March of this year was like crazy with like all the runners. Mm-hmm. And what's funny too is like I looked at like a Qual Maggie tweet today, and he said that all of his P&L came from like January, February, and then like October and November. Mm-hmm. So like really just 4 months out of the year. But for me, coincidentally enough, like my best quarter was actually July through September.
Yeah.
So, and that was with like, I think we had in quarter one, we had like over 350 stocks that ran 50% intraday. Mm-hmm. And then like quarter three, like we significantly slowed down. We had like 180.
Yeah.
But I was able to like produce more. So what I figured out like after the beginning of the year, there's a couple things. So like the first one was definitely sizing. I was getting more comfortable with taking more size. And we always talk about like the importance of like being able to see red.
Yeah.
Because if you can't handle seeing 3 or 4K red, then you really can't make like anything over 10K green.
Yeah.
So being able to like allocate that risk helped a ton. Another difference that I learned kind of going even into like the end of the year was really focusing on scaling in. Mm-hmm. Because in the beginning of the year, again, the beginning of the year was so hot that like if you didn't pretty much scale in 100% right away, you would just miss the trade. Mm-hmm. And when the slowdown came for me, as well, like in April and then May was the slowest month of the year for me, but that was kind of different. It was not only slow, but I was gone like more than half the month I was in Hawaii.
Yeah.
So the big thing that I had to learn after that big sort of like slowdown in April, May, and then June pick back up, but those 2 months was being able to scale in.
Yeah.
So a lot of the time I would like take starter, and then I would just get chopped up for like a couple $100 every trade.
Yeah.
So I learned to be able to hold through more red unrealized with small size. And then once it started to confirm back up to even like my entry price, then that's when I would start to hit full because it was confirming the strength off that dip.
Yeah.
So that was a big thing too, because a lot of my mistakes happen from just over trading and then getting chopped up too much. And especially with my starters, like I'll take 80 trades in a day sometimes. Like I way over trade, but that's because that's how I started, with like the micro scalping. Right?
Yeah.
So I would say the scaling in and then being able to learn how to be numb to seeing more unrealized red is what really kind of helped me stay consistent through the slower months, because I was still able to produce like consistent, 9-10K green days while the market was pretty suboptimal, because I was only shooting for like that 5, 6, 10% style like trade.
Yeah.
And now going forward into January and February, hopefully we'll pick back up. But now I have more sell rules to be able to take advantage of like the bigger moves.
Yeah.
So I got down packed like the scalp. I've really solidified. I feel super confident in myself with the scalping, where like this year really proved that it's a nice feeling, and you probably can speak on this too, where the worst case scenario, I can always go back to making like 1 to 2 mil a year, just scalping and like not any conviction trades or anything. And for you, it's like now your minimum is like in your sleep, you could make like 6 mil a year.
Yeah.
But like you still want to push it, but that's almost like the backup plan type shit.
Right.
So
that's the plan when like things are getting slower. Like the past 7 months, right? I should have been in that mentality, and looking back on that, we talk about it all the time, but I've gone through certain patches of my career where that happens. It's just on a smaller scale, and when it's on a bigger scale, it gets magnified. When I was starting off younger in my career, I would have stretches of 3 or 4 months where it was like nothing, right? But all of a sudden, it could take me a month or two. You've seen it for me many times where I'll be down half my account and then the next day I'll double it, right? Literally. So it's like, that's how I've always been. But when you're trading with that much size, it's a lot harder to find that liquidity to double it, especially when you're not trading options, and even options have a little bit harder of liquidity. But yeah, so going back and talking about you kind of are like a consistent guy who's never going to see huge highs, but also you're never going to see any kind of lows. You're always just going to keep that smooth uptrend. It's like the SPY of your trading, right?
That's the goal.
Yeah, and that could change over your career. You never know. Like when you get yourself into a cushion where you feel like you could take on more risk, of course. We differentiated ourselves in terms of like how much risk. Obviously, me losing 2 mil in the past. I was up. I had a $2 million account, brought it down to 300,000 or 250,000, then brought it back up to 2.2, and then I brought it back down to 100,000 or 20,000 or whatever it was. So obviously, I got a little bit more swing, I got a little more risk on the table, and I'm taking some massive trades. But those pay off when the market's hot. You're going to see me crush it. But when the market's slow, that's when there's no more liquidity to help me anymore, right? And so, but for you, you're still at a point where that liquidity.
It's not an issue.
It won't. No issue.
Probably
right?
3 or 4 times like the liquidity push.
Yeah, and the liquidity is always going to be an issue, no matter where you're at in your career. It's just it's stock selection at that point. I'm going to have fewer and fewer stocks that I can play, but you still have that. Obviously, you're still pretty wide open. You're getting close to that. You're going to start feeling it here shortly. Yeah. But for me, I've been. That's kind of like pushing it and pushing it and pushing it, and when you push it. All of a sudden you can find yourself down quickly, the opposite way. And I learned that, in the past 7 months. So, for me, the past 7 months have been a huge wake-up call. And it's been the biggest thing is the comfortability side of it, right?
Yeah,
like,
I was going to ask you about that. Like, what was the emotions like making that much fucking money in the beginning of the year? Because that was just, like, insane. How did that affect you, like, the next 7 months? Like, that emotional high of seeing, like, it was like every day it was like 400, 500, 750. Then you hit the mill a couple times. Then you like an off day was like 100 for you. Yeah. So like, what was it like? How did it affect you when everything really did slow up, and then you had to just accept like, damn, the market's really only there for maybe 30 today, or like 40, and that's still 10 mil a year, but the relative, like it's all relative,
Right.
So like, how was that like pullback like? And also, what was it like making all that? Like.
Well, it wasn't a bad feeling, doing that and having that kind of opportunity and creating that, but, I don't know. Like, I remember very, very specifically, being in that moment of doing that. It was like a typical day was like 200,000. And when you get going like that, it doesn't feel like anything. It's like it feels like when you're at a high level, if you're a baseball player, basketball player, football player, when you're performing and doing what you should be doing, it's like you've already projected that and seen it and felt it almost. That it's like when it happens. It doesn't feel like a ton. And I'll be honest, when I was doing it, it was like I was just doing what I should be doing, right? I was just following my motions, following my plan, my process, my strategy, and good things were coming of it. And it was easy. It was there. And I don't want to give off that persuasion that trading is easy because it's 90% fail. We all know it's not easy. But, going through that emotionally, it was like every day I was just locked in. I would be on my screens. I would, the feeling where you don't get up to eat, and that time was like I wasn't getting up to eat for 3 or 4 months, right? And I was just locked in, right? But during that time period, it really felt like I was just doing what I should be doing. Now, did I expect to be doing that? No, but I was taking what the market gave me.
Yeah.
And when you take what the market gives you, instead of force things when the market's not there, it's way different, And so it really, at the time, felt like I was just doing what I should be doing. Now, all hindsight, and 7 months later, where I'm at right now, I'm like, damn, I wish I could do that.
Yeah.
And I know if those same opportunities came about, I'm in a position where I would double it or triple it. But those opportunities are no longer. We're not seeing the GameStops, the AMCs, the Costas. We're not seeing the run-ups every day. We're not seeing the range, right? And so when you get a week long, 10 days, 2 weeks, 3 weeks, 4 weeks runners where these things are moving up and down, the liquidity's in the billions, right? You're just sitting there licking your chops every single day because if you get on the right side of that thing, you're going to be fine, right? And so I knew every day, I was no stress. I looked at GameStop's up another 80 points. Every time it goes higher, I'm more and more excited. I say this all the time. When there's a stock that keeps on running and running and running, we are going to make more and more and more for our style of trading, right? And it might not be the case for everyone, but I think a lot of people, when things are going like crazy, right? We get the DWAC, we get the drives.
Even the CEI run.
The CEI. I made some decent money, but even that liquidity was hard. I remember trying to catch the dip, and it was like when I was using my inherited, and I was slipping it up a hair even with my inherited, and that wasn't even my main account. So, things have changed, and the biggest thing was I had to come back down. And I know it sounds crazy, but when I came back down and had to fund my account again, that was like, holy shit. Like, what am I doing? Like, I know I can in my sleep do things that would have kept me in the game, that keeps me going, and I know what I do can work. I was just trying to take too much meat on the bone, and I was just trying too much size, trying to make it all back at a couple trades. And when I'm going, it's going, but when I'm not, and so I have to be a little bit of a hybrid trader, and I do better when I start with a 1,000, turn it into $1 million. I could do hybrid trading a lot better because the size is so much smaller, and when I lose, it's a little bit, right? But when I'm in the $1 million, $2 million, dollar account range, things come down quickly, and then it's a lot more money on top of that. So it's just a little different. But I will say, in those 7 months, I learned so much. I took some long-term time, and I studied my ass off, learning about Peter Lynch and things like that, and I'm preparing for my future. But not only that, I'm still going to be day trading. I just want to be a well-rounded trader that no one's ever seen, And I know a lot of people say don't spread yourself too thin, and I 100% agree. But I really want to prime myself in day trading when it's hot, swing trading when it's hot, and long-term when it's hot. And if I can get those 3 things going, that makes me a well-faceted trader. Now, of course, if you're trading with billions, mainly you're going to be doing long-term. Yeah. You're not going to be getting in the game. You could do GameStops and you could do AMCs, but anything behind that, it's very, very tough to get yourself in and out of things, intraday especially. So, to answer your question, emotionally, at the time, it was like, I'm just doing what I'm supposed to be doing. And I was living in the moment. But now looking back and going through this slow patch, it's like, damn. Like,
I want that back.
I want that back, yeah. And we all do. Every one of us who are, especially day traders, we all want that back. But the thing is, we take what the market gives us. We cannot force when things like that are not there. Because when you force, And when you get yourself in that situation where you feel like you should be performing better and better and better, you could be a smarter guy than you were, like I feel like I am, now, but it doesn't matter because those opportunities aren't there anymore.
Yeah.
So you don't get to show yourself like you would be able to back then.
Yeah, that's a good point.
And you have to accept the fact that, like, moving forward, the market's going to give what it gives, and you have to take what it gives. Now, if you go and say, well, GameStops and AMCs and costs, and you take those same strategies and you try and use them now, good luck,
Yeah.
It's just not going to happen. And that's exactly, I knew we weren't going to get those GameStops and those AMCs, but I tried to come down, and I didn't come down far enough. And that's the basis of, like, and not only that, but then it got me in a realm of comfortability where I just have so much cash, right?
Yeah.
And I'm just sitting on something that I never could have dreamed, right? No one can ever get yourself into that position, because I knew I would deep down. Like, I know myself, and I always put myself in that position. I didn't think I was going to make $12 million in 3 months. No one can imagine that. For me going from where I was to in 3 months doing that, it was a very high. And so when you do that quickly, I wasn't quite prepared for something like that. And then coming down, and then, month after month, I'm like, damn, like every month after that, I was like, it felt like more and more money.
Yeah.
So recently, obviously, I got another property, and so that's kind of getting me back against the wall again. But the comfortability side of things was one of the biggest things that I'm trying to figure out how I'm going to get myself away from, because when you get comfortable in life in whatever you're doing, you can get complacent, and that's exactly what I did. I got complacent. I would just try and shoot for 200% on a random day with a $2 million position, and I'm just like, what am I doing? Like that, we all know it's not there.
Yeah.
And I'm just taking it, and I just kept taking it.
Yeah, literally.
And so going back on learning from that, I learned so much over the past 7 months that I know when the next runners come, I will be locked in. I know I'll be able to handle it perfectly. But then when things slow down, I'm going to slow down. You have to know when to size up and when to bring it back. Mm-hmm. And in that time period, I sized up quickly, right?
Yeah.
And then when that came back down, I didn't come down far enough to where I needed to. And we're probably talking a very small amount that I needed to come down. But that little amount compounded over time. And then, I was up 2 mil, back down to 300K, back up to 2.1, and then back down to 20.
Yeah.
So those fluctuations I learned a lot from. But the biggest thing was being comfortable was I would say the number one reason why I kind of really fell off. And number two, I didn't size down enough. So
yeah, it's like the 2022 goal for you is the Brady mindset versus the McGregor mindset.
Yeah,
McGregor, I mean, that dude's just falling off because he's taking 3-month trips on a yacht, and he's got all this money, and he fought Mayweather, and he was at the peak.
Yeah,
and now,
good for him, he deserves it. But
100%. But at the same time, coming back down and getting paid $5 million for a UFC fight, no matter how hard he trains, it's like he's never going to actually have that fifth gear, that sixth gear, like he did when he had nothing.
Right.
I just actually talked to this guy in chat about it, but it's like once you lose, you can, the difference between going from 1 mil to 10 mil, it just does not hit the same as nothing to 1 mil.
Yeah.
And the issue is that you'll never get that hunger back. It's just a different type of hunger at that point.
Yeah.
It becomes not a point of necessity, but it becomes a point of
legacy. Almost.
Legacy, yeah. It's like necessity versus legacy. For both of us, our journey's up. We're never gonna have that rush and that almost, I don't know, dopamine kick, like in our brains.
Yeah,
we're never gonna have that feeling again, making our first 10,000 or making our first, 50,000, day.
And remember this. I mean, it feels way different, and it feels almost way better when you do those days than it is when you're, okay, of course, when I made $1 million in one day, that was right up there. But when you make those small amounts, we all know, you're still trying to make it. But when you make it, it's just different.
Yeah.
It doesn't hit the same. And so, yeah, exactly, Alan. Cherish it.
Yeah.
Or you could cherish that shit, exactly what you said.
Yeah. But that is something that I actually had to come to grips with. It was like a month and a half ago, and it was a day where I made it was just the typical thing. I made like 9 or 10 grand,
Mm-hmm.
and it was the first day where I literally felt nothing.
Yeah.
And for pretty much the past 2 years now, or really it was a year and a half, because I'm not even on 2 years of being like a consistently profitable trader. April of 2020 was when I took off.
Right.
So it was like the end of November or maybe the beginning of this month or something. And I made like 9 or 10K. And every single day for the past year and a half, that was kind of almost like my cup of coffee in the morning. If I made my 9 or 10, I was satisfied, and I was happy with what I did that day. And if I worked out, if I went and saw my friends, that was like a bonus.
Right.
But my entire life was revolved around trading, and about a month and a half ago, that like changed. Mm-hmm. Because I made like 10 grand that day, and I just literally felt nothing. And and it was like pretty like depressing that day, because I had to talk to my parents about it. I think we talked about it for a bit. Mm-hmm. And it was it was such a weird feeling, because it was the first time where I sat there and I was like, wow, this isn't it's not giving me what it used to. It doesn't have that same feeling of satisfaction. So that's where the goals now have to shift over into more of that Brady mindset. It's not just about making 10K. I could always fall back on making 8 or 10K a day,
Mm-hmm.
But now it's about moving on to the process and how much I can really get from the market, like Qual Maggie style, and have that different mentality,
Yeah.
And I'm sure you're the same way.
Yeah. I mean, and the biggest thing too is, we're talking P&L and numbers, but the biggest thing is, as I always say, percentages. Now, we have, at least for my challenge especially, I have P&L goals, so I talk about P&L a lot. But percentages are the biggest thing, no matter where you want to go in your trading career. I don't care if you're trading with $100, $1 million, $1,000. It's all about percentages from what you can take from when you started to at the end of the day, or the end of the month, or the end of the year, or whatever.
Yeah.
That's the biggest thing. When we're talking P&L, it's because we have P&L goals.
Yeah.
And you don't have to have P&L goals. Maybe you have percentage goals. And one thing that I wish with Trade Zero is that I show my percentage gain for the day, or my percentage made on the trade, or whatever, because it is something that needs to be focused on more, is percentages. But yeah, I mean, we trade obviously now with numbers that are not really, comparable, or you might not be able to put yourself in the shoes yet. But that's why I started with $1,000, because it's very relatable. And I'm trying to show what you can do. I've done it multiple times. Now, obviously, I'm probably never going back, because I've done it 3 times.
Yeah, there's no point.
And I did those 3 times basically for you guys to kind of see what's possible, record it all. And now it's kind of like for me to like kind of trade for myself and, my legacy, and kind of just also, show you guys what's truly possible with bigger amounts now. A lot of you guys have found me through the years, seeing my challenges, and I'm not ending my challenge, I'm just continuing it. But yeah, so I just want you guys to know, we're talking 10 grand, 50 grand, $1 million, whatever, those are just our goals, but make sure you always focus on percentages before P&L, because that's the biggest thing. But
we all started there.
Even Ariel, we can go, Diego. It's not like we all start and made it. The reason, the biggest thing, guys, is like we're all trading to make it. And we found an avenue with like small caps that can help you make it, and make it quickly if you do it right.
Yeah.
Options can maybe do the same thing. I don't know enough, but you're not gonna go from rags to riches. Trading large caps. You're going to go from rags to riches, trading small caps, trading options. Things that pay out for high percentages are where you're going to take small amounts and turn it into big amounts. And I realize that a lot of you guys don't have a lot, and that's totally fine. We've been there. Jordan's been there. I've been there, Ariel's been there. It's not like we all started with a lot, like, Donald Trump or something.
Yeah.
So we can all relate. It's not like, I'm from Kent, you're from, the same spot, kind of, sort of. And, I'm living a different life now than I was when I was younger.
Yeah.
But it's always important to remember where you came from and continue to push yourself to just be a better person every day. And, that's what you talked about in 2022 is like you're focusing a lot on your, not just your financial goals anymore, but it's just being a better person, focusing on sleep maybe more, focusing on friends and family more and whatever. But
being more well-rounded as a person as opposed to, I made a post on it in Trading Floor. But, if you constantly go down the path of just money, then it's never going to be enough.
Right.
And I would rather I'd rather make $2 million a year for the rest of my life and have, a lot of time with my family, go on, these fun trips and have very low stress as opposed to making $20 million in a year. And if that means that I'm at the desk and I'm high strung and I can't leave the desk because I'm nervous and I can't sleep because this overnight is stressing me out, then you haven't won.
Yeah.
Trading, it's not about the bottom line. Your bottom line number could be a comfortable 150K a year. I mean, it really doesn't matter. Whatever your comfortable number is, then that's really all that matters, because if you're stuck at the desk all day, if you're always high strung, if you're stressed, then you're just spinning your wheels. You might as well just work a 9 to 5.
Right. Right.
The only thing that you're getting more out of is just the P&L. But if you can't even be there to enjoy it, then it doesn't matter. You're gonna wake up at the post I made. If you wake up at 40 years old and realize that no amount of money can buy the time we have now, then what'd you do all that work for? You did it for nothing, essentially.
Yeah.
Just chasing the almighty dollar.
And like. That's exactly right. Like for me, I don't want to be, I do want to be a Warren Buffett. I don't want to be an Elon. I don't want to be a Bill Gates. I don't want to be, a Jeff Bezos, because those guys, they put in so much time and so much effort. And the reality is we're lucky and blessed enough to be sitting in a situation where we could invest in Google and they're a great company and we got passive income for the rest of our lives. And it's just a crazy world that we live in, that we can do that and not have to sleep on the floor like Elon Musk did for years and go through all the hard times. And you're always gonna go through tough times in trading. It's there's always risks in companies. There's always risks in what you're putting on and taking off, and whether it's long term, middle term, or just day trading. But if you do it right, if you work hard, if you look at thousands of charts, if you look up setups from the 50s and 60s and 70s and 80s and study people who are successful, that's the name of the game. I love surrounding myself around people who know what they're doing, and I do that basically through social media. When COVID's over, maybe someday it'll get a tight niche group, maybe that we're in contact more and more. But it's just a big thing is surrounding yourself around people that know what they're doing. And I don't want to be living a life, like you said, where I have all this financial gain and I'm not doing anything with my life. We do this to create that freedom, that life where, if we want to pick up and go to New York tomorrow, we'll just go, and like, that's the long-term, thought process of starting trading, is we can just do that. Now, if we were in Jeff Bezos' shoes or Elon Musk's shoes, it's hard for them to do that. Yeah. Maybe not now, especially Bill Gates, he's out of a lot of it. But, during their career, it's like, did they have a great family life and a great, life with their significant other? And, it's like there's so much sacrifice. And I'm not saying they did it the wrong way. I mean, I respect them for all their hard work and the way that they changed the world. But that's just not for me.
I know. Yeah.
That's just, I want to have a free life and not have to worry about anything some days.
There's no liability. I mean, it's just the trading desk. I mean, you could... As far as, like, even long-term shit, I mean, you can just, like, set it and forget it type stuff.
Yeah.
I mean, it's, like, it really is like nothing else. I mean...
Right. It's like nothing else.
Yeah.
So, and that's why it's such a powerful resource for everyone to learn, and that's what I always say is, like, a lot of people think, and this is a niche market still to this day,
Crazy.
Which is crazy. And it's only going to get crazier, I think, in terms of like how many people participate in the market. Yeah. Right now, unfortunately, we're seeing it slow down a little, but we were on a high, and it's fine. You know, over the next 5 years, I really do think there's going to be more and more participants. The market tanks. I know my strategies work with the market tanks. We've studied 08, 07, 09, and how things can recover quickly. I mean, whether it goes up or whether it goes down, traders can. It's going to be great. The more volatility, the better. Yeah. Do you want me to ask some of your questions now?
Yeah, we can just rattle. I mean, there's so many. We can just rattle them off.
So, what are your highest long-term convictions?
That's all you.
Oh, okay.
Yeah, these are like for both of us.
Okay.
It's not just me.
So my highest long-term convictions in terms of stocks, well, I like
not a financial advisor.
Yeah, exactly. I'm not a financial advisor. Trade at your own risk, have a plan, a process, and a strategy, and don't blame me. But so a large, let's go over OTRK. So for an example, I was really convicted on OTRK long term, and it went up like about 80%, sold half, and the other half tanked down to like 10. I don't know what it's at now, and I was like, all right, cool. So there's risk in long term, folks. But what are the highest long term convictions? Affirm is probably right there. I really like, and I won't go too much into it, but the way that they partner with Amazon, they're the only one who's exclusively partnered with them for the next 3 years, I think it is. And Black Friday just happened. I love the way ADR, their average daily range, they got some movement on them, especially with that news. I think they're partnering very quickly with a lot of long-term, or a lot of big companies. I think it could affect the credit card space longer term. It's a bigger market cap, but it's not a massive market cap. I think it can, break into some bigger barriers in terms of maybe $100 billion within the next year. I think it's very plausible. Maybe $150 billion market cap. So I don't know, but I would say that's one of them. What's another one that I like? Upstart, something that I'm watching. It's very whippy. There's still a lot of unknown. I don't like that FICO's market cap, which is what it's trying to overtake.
What does Upstart do?
Yeah, exactly. I don't like that they're starting to take over like FICO's kind of market cap. They're at like 15 billion, and Upstart's at like 10 billion. So that that's kind of a thing. Upstart, what do they do? I don't know a whole lot about it yet.
Are you breaking up? Can you hear me?
I'm breaking up. Yeah. We won't make too much fun of that, but that was funny. But yeah, so what's another one? Those are all kind of high risk, high reward stocks. I mean, a GE I'm in, Apple's a good one that I'm in. Peloton's down massively. Who knows with that thing? Snapchat, it's tough because we were just talking about it, but it's like, it's one that I always watch because they grow so quickly. Their ads are doing great. Social media is tough, but I don't know. Highest long-term convictions, that's probably it. There's another. Snowflake's another one that I like. I've been averaging in over that. I nailed the bottom on that one, and then I've been averaging up to it. They had solid earnings as well. So yeah, we'll just leave it at that. We'll go over questions here in a little bit, guys. Which do you have a higher win rate on? Buying on high or low in a ticker that seems to be forming a wedge, or buying right before the possible breakout when it's very tight?
Win rate is probably a lot lower if I'm really buying when the wedge is getting tighter, but the risk reward is a lot higher. So it's like a give and take. My win rate is probably better when I scale in on dips, though, but the risk reward is going to be a little bit less because my stop's way wider. You get to the point like on those wedges where sometimes they get so tight. Sometimes like a 10-cent, like make or break moment.
Yeah.
And then in the right market, you buy it and you can be instantly up like 40 cents a share. And then you can just let it ride for like 60, 80, right?
Yeah.
So, but that win rate is probably like 40, 60 because a lot of them break down.
Yeah.
So I'll get in and literally 10 seconds later I'll head out.
Yeah, well, and that's the thing is like with that wedge, if it breaks down, you get out instantly.
Yeah.
If it breaks up, you let it ride.
Yeah, exactly.
And like
that's my favorite trade.
Right.
But yeah, I'd say win rate is less on sort of like the tighter. I don't ever buy breakouts, but if it just tightens up the consolidation, win rate is probably 40-60 or 50-50. And then if I'm scaling in on like a high conviction play, On my trader view, I think it's like almost 70%.
Okay.
So
Okay. For me, I do better at buying higher lows. I don't trade a lot of wedges.
yeah.
One, because a lot of the times when it's forming a wedge, for some reason I find it's like a little bit lower of liquidity, for me at least.
Yeah.
And two, higher lows have always been my, IRNT. I just love something midday consolidation. It's like just my bread and butter. So, how to clearly identify wedges? Well, we can pull one up. Not wish, but what do you have a chart probably in here somewhere?
If you go
right
down-
here. Is this a wedge?
Yeah, there you go.
Okay, so we have ABCT forming a wedge.
Pretty much, it's just an initial run up, bottom out, and then if it like goes up to sort of a double top, then you just wait for the next pullback and confirms from there. So.
And this is a multi-day, multi-week wedge,
Yeah.
by the way. This is different.
And it's just a ton of screen time, honestly.
Yeah.
You just get to the point where I see anything pop up and then dip and then re-pop up, it's immediately on my radar. I don't even think about it.
Right.
And then I start really dialing in and watching it. And then if I see it hold in the right spots, tape looks good, blah, 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 then that's when I hit. So.
Right. Okay. Awesome. I'm reading this one, making sure we're not going to give out financial advice or tax advice. Wondering about...
just skip it.
Yeah. What percentage of your account do you trade with and has this? Should this change with the growth of your account?
Now, I still have a fairly low account. I mean, my account's 300,000, and then my TD account is 200,000.
Mm-hmm.
So, max I'll go in with like $250,000, but
Okay.
then consistently, I would say for the past like 4 or 5 months, consistently I'll go in with like 120, 150K.
Okay.
So I'd say roughly half.
Okay. Yeah, and for me, as something that I'm 2022 resolution, I need to sometimes take less size, obviously. That was one of my biggest weaknesses. I'd like to keep it to 20%. It's kind of 25% max. But
I think you can go higher, but as long as you have a stop on your... I think you should do the 20% rule.
Right. And the thing with me is, if I stay disciplined enough, and this is what I'm, if I stay disciplined enough, what I do is I'll size in with like a starter of like 10 to 15%,
Mm-hmm.
and then I'll find like where it looks the best, and I'll just nail it for 100% of my account. And if I stop out, I lose like 2% max because my stop is where my sized up entry was.
Yeah.
And that's when I'm trading at my best. But when I get undisciplined, I'm like taking 30-40% to start, and then I'm just jamming the buy button all the way down until I'm like bleeding myself out.
Yeah.
So, I'd like to think that I can stay disciplined enough, and that's part of the complacent kind of being comfortable thing. But also, having that 20% rule is also a nice rule because then you're never taking on too much risk. But it's like there's sometimes when I'm like 95.5, and I'm like, if I don't take on 100% of my account here, I feel like I'm wasting time. Yeah. But it's just a fine line, and it's something that I'm going to get better at. I know that it's consistently more important for me to trade with 20 to 30%. I know that.
Yeah.
And I'm definitely going to work on that. Now, it doesn't mean that I won't be trading with certain times 80, 90, or 100% of my account
saying,
plus.
Set like a daily stop. So for me, going into the new year, I have a new rule where my daily max loss is 2 times my average green day from the past 20 days.
Yeah.
So like right now, my intraday risk is like 24 grand, and I'd never touch that kind of risk.
Not even close.
It's really nice, like mentally being able to look at that and see, wow, like even though let's say on a trade I'm down 3 grand unrealized, but it's still working, it's still holding the levels, right? But let's just say I jumped in maybe a little too early, and my max loss would be 5K. Being able to look at that number and be like, wow, I actually have still a lot of room with my intraday risk that's under control.
Yeah.
Then it gives me more confidence to be able to like hold and not panic out, because a lot of those trades, like especially this month, how choppy it was, there were so many times where I was down like 3 grand, but then it would come back and I would nail it for like 5 or 6 or 7.
Right.
Because I just didn't panic out. Whereas if I didn't have that stop rule, I definitely would have panicked out dead bottom, and then I would have had to average up higher. and then I would have siphoned off $3K of cash. So then I'm sitting there with only a $2K winner as opposed to a 6.
Yeah, and trading around a core is something that I'm working on as well.
I love trading around a core.
Trading around a core is very important and always will be, I think. It takes some risk off, puts some risk back on, and you're consistently kind of peeling, and it's just like a little less stressful, and over a consistent period of time, it tends to, I think, do the best.
Especially when it gets choppy.
Yeah.
You know, midday consolidation, you think it's going to break out, but then when the market gets slow, it really just knives, holds, goes back up, knives, holds, you know.
Yeah.
So being able to work around core, that's really the only way I trade, at least on my A+ setups. If I'm not working around core, then I'm doing something wrong.
Yeah, it's important. It's definitely important. So yeah, it's something that I'm going to work on 2022. I'll say that, and we'll leave it at that. It would be nice to focus on the key difference between you as a non-profitable trader and aha moment that made you realize that the thing that you weren't doing the whole time that made all the difference. Take a step further. Teach exactly how do you implement the key step.
A bit of a run-on sentence.
Yeah, I could say the most of that.
I think the aha moment was the scalping for me. When I did the micro scalping in April, that just opened my eyes to being like, wow, you know, if I'm making, you know, a lot on something that's moving like 3% off these like algos.
And you opened my mind to that.
And so when I translated that over to real price action, you know, like stuff that's moving 20-30% in a day, then it was like, holy shit, I have all this range, and it became so much easier for me.
Yeah.
Because like we just said, taking off the risk, you know, peeling off some shares on the pops, adding them back on the dips. And then the sick part about trading around a core like that and scalping like that is that you accumulate enough cash around that core, then you can say fuck it and go all in on that last dip where you think it's the make or break, on that tight consolidation. And then when you win, it's like a banger. And then if you get stopped out against that average, you still have, in my case, it would be, you know, a couple grand in cash.
Yeah.
As opposed to I'm just holding and holding and holding. I never sell. I just keep buy. And then I get stuck, you know, with a break even or maybe even like a slightly red trade.
Right. Mentally, it's just a huge bonus.
Oh, 100%.
Yeah.
So I would say scalping, it was like the big aha moment for me because I realized I didn't have to make 10% on a trade. I can make 2% on a trade, and it can still work.
Right. And, you know, with a range of a stock, right, you know, a stock might be up 60%, but you can make 120% on the stock. It's just a matter of taking the dips, selling the rips, trading around a core, you know, making sure you're catching all the range, and you can easily make more than the stock's up on the day if you do things right. And that's a big...
For me, that was semi.
Yeah.
So that was that big day for me.
Yeah.
In the range that I traded it was maybe like a 20% range, but I made like 50% that. I mean, that's the best I've ever done working around core scalps. Like, that was my best day ever. That was
your peak.
90 or 92K.
Oh, yeah, that's right. Day. Yeah.
So, and that was like 20,000 shares hitting in for like these 6K scalps, and I just was doing it over and over and over again. So
Right.
Yeah, I don't think I'll change up until liquidity becomes a real issue, like with the big size. But for 2022, I'm not really going to change much as far as that style of trading.
At least for the first 6 months or 8 months or something. Yeah. Okay. So the biggest aha moment for me. I think I answered that, right? Or did I not? Maybe not. Yeah. So it would be nice to focus on the key difference between you as a profitable trader and an aha moment that made you realize this was the thing that you weren't.
Yeah, like Lightbulb for you. I think Lightbulb for you must have been Simply Plays.
Yeah. I mean, Lightbulb for me was realizing that, you know, when the market gets, just waiting for the market to get really hot, and when the market gets really hot, I mean, even on something like Fun, right? That thing went from 2 to 24 overnight. You know, within the first 20 minutes the market opened. No way would I have held that.
That was DWAC, right? Or
yeah. Oh. And there's no way that I would have held that in a 24. Yeah. Best case scenario, I'm out at like 8.
Yeah.
That setup was a pretty weird one. You know, but if I'm hot, I'm short. Well, I did short it. I shorted it at 16s, and then very small. I lost like $1,000 on it, but I know that if I'm running hot and I'm been consistent, I'm shorting that heavy 16s, 18s, 20s, it's holding down, and I'm probably making at least 20%.
Yeah.
But my mentality was shifted at the time, and I've been losing a lot. Don't need to compound my losses. Mentally, I'm not there, and I ended up stopping out for a loss. And that's just a difference in mentality of how you're doing as a trader at the time. So yeah, I would say biggest aha moment, we can say sympathy plays, and then also, realizing that even, 2, 3, 4% a day or small movements and just taking the piece of each move throughout the day, it can really, really add up. And you're the one that kind of showed me that with the micro scalping and kind of looking at like small movements that you would take, and it's just like, yeah, it can really add up. And that's the beauty of, it's what I said, you can make more than 100% if the stock's up 70% on the day, and just by trading that one. So, yeah.
It doesn't even include shorting.
No, exactly. So that's just one side of that, right? So it's a good point. So, yeah. And then, what do I do to find sympathy plays? Basically just, like Tesla, right? It's a big runner. And then, I would look for like a KNDI or like a Blink or, something that involves with the electrical vehicle companies, and it can ride behind it, because if people see a stock's up in that same sector, they're like, okay, well, even if it's not the big one, it can still show valuations that might not be the same as where it should be at. Like that sector's worth more at that point because Tesla showed that it's worth more, and then everything else behind it started following right behind it, right? So, or it can be something like dries and tops where, it goes up 1,000%, and then the rest of the sector might start just following behind it because there's so much momentum I'm missing out on the first one. Yeah. So, that's a simple way of putting it. Did you use the scan at the beginning of your trading? For me, I believe I started using a scanner pretty early on, and I don't think I've ever not used it since, really. I've always kind of used the scanner to help me find stocks. I mean, I can't stress it enough. For me, at least, the scanner is a very important tool, just because I can't look at everything throughout the day. I can't, I can't be on top of, all these different stocks throughout the day, right? It's not that easy. And so, having a scanner...
Charger.
Oh, yeah. Having a scanner, really helps me find, things that are moving very quickly up or very quickly down. And so, yeah, I can't trade without it, to be honest. And basically since the beginning of time. Basically, I mean, the very beginning, I didn't know what that was, but I learned about it.
Yeah, and I use this. I've used it since day one. I was even using it in, I think, 2018.
Yeah.
Towards the tail end of 2018, so.
Yeah.
Because you recommended it and stuff. And, and it's true. I mean, I'm pretty lazy, honestly. I just wake up and I wait for, like, my range scan. I look for top intraday gainer. I see whatever's holding consolidation, and then pretty much just wait for technicals after that. To play long or short, because sometimes, like, you get those chat pumps and stuff that go high day, and they just get obliterated, and then you can short the lower high and fade it for, 8%, 10%. Just the more range, the better. I mean, that's all I look for is, 20% range or more, and there's money to be made.
Right.
I can't waste my time on, stuff that's not moving, 3%, 5%. It's not going to move the needle.
No.
So, yeah.
Okay.
Scanners,
cool.
A+.
And then, let's see. Mentally, what did you tell yourself to rebound after a bad day or missing out on a huge play?
Well, I think I'm probably the most, because I would miss out on all your calls.
Oh, yeah. I remember I'd message Jordan, I'd be like, hey, this one's a good one. Did you take it? No. Hey, this one's a good one. Did you take it? No. And eventually I was just like, all right, I give up. This guy's going to take it when he wants.
Yeah, I'm probably the most well-versed on this subject. So, as far as missing out on runners, I miss out on runners all the time because of how I trade. Like Cam said, I don't take huge risks, so then that means I don't get the huge reward. I'll have the good days occasionally. I'll have those 30 or 40K, green days, twice or maybe 3 times a month, but, I also don't take those big, 50K, hits and stuff like that or whatever. So, for me, I'll sell something way, way too soon, and it'll go 20% without me, or sometimes it'll even halt without me. Mm-hmm. So, pretty much, you just have to keep it in perspective. The way that I look at it is, if I've captured on a trade for me, if I capture anything over 15%, that's like a home run for me.
Yeah.
You know, I really just don't hit those 50% like home runs very well. I've only done that maybe twice. NTN was one of them. I made like 350% overnight on that.
Yeah.
But those are so rare for me that I think as long as you're trading and taking the right entries, then the exits you can always adjust. So if I sell way too soon, then that actually means I did something right because I'm in the right stock. If I'm in a stock that just shot 20% after my entry after I sell for 10%, that means I actually had the right idea. I was in the right stock. I had the right stock selection, which especially now is super important. Which
important.
Yeah, a little speech impediment coming through. No, but if nowadays if you over trade with different tickers, then that's just a quick way to make just a ton of shitty trades. So really, it's the 1 to 2 stocks a day that matter the most. And if I'm in those and I sell too early, then yeah, it sucks. But at the same time, I can sit back and say, you know, I didn't nail it this time, but I know I can nail it next time.
Yeah.
So I just always have to keep that perspective. You know?
Right. And I something I wanted to talk about, and I was going to talk about it earlier, but I forgot about it. You know, one thing in trading, it's really important to learn is, you know, first off, if you trade with a small amount, you know, and you keep losing it over and over, at least you can afford to trade again, right?
Yeah.
But when you're trading with a big amount and you blow it up once, you may never see the market again. So it's important, I cannot stress it enough, to trade with $5, $10, $100. At least have a little skin in the game to know what it feels like when you're up or when you're down. Get those emotions flowing, get that adrenaline pumping. Lose it a couple times, and obviously not purposefully, but I'm sure that'll happen because that's the way it works most of the time.
Happened to all of us, dude.
Yeah, and so, and then, you know, once you finally learn from all those losses and figure out what works, over time you'll start to grow that $5 account to $10, to $20, to $50. And before you know it, you have 50 grand because you learn from all your mistakes and you're just compounding and using the market's money or using the house's money to then there create opportunity for yourself. So I cannot stress that enough. And number 2, which might even be more important, is always focus on your entries more than your exits. The entries will, if you nail the bottoms of stocks and you size in properly and you get in a position where if you buy at $2 and the bottom is $1.99 and all of a sudden it's up to $2.20, well, guess what? No stress, paid immediately, take it off the table, you were right, goes to $2.50, great, you're even more right, remember for next time, and move on, right? So entries are so important to be a good trader with, or it's a very important thing to learn before exits, because entries, if you nail the bottoms, you get to decide where to sell. But if you don't, then, you know, at the end of the day, you know, you can be in at 190, have too much, you're too scared, it just dips down to 170, before you know it, you stop at 175, snaps to 170, goes to 230, and now you're even more pissed off because you were right, you just didn't have the proper entry that you could have had. So it's so important to have proper entries before you learn about exiting, because as long as you're paid, you can decide where to end off, where to exit, where to cash in, right? But if you don't have that proper entry, then the rest is all effed, right? So
even like your GameStop.
Yeah, even my GameStop. You know, the big trade of the year was GameStop, and I was in that at, you know, I started scaling it at like 180, and I didn't start nailing size until like 120, 135, something like that. My average is like 145, right?
Yeah. And,
you know, I was down at the lows probably like $30 a share, but I was so highly convicted, and it was so fast. I felt like it was just, I was just going to, if I could add any more 110s, 115s, I was just falling into a money pit, you know? But that's because I've seen it so many times, and when you see a stock go up that high and down that quickly, and you see the volume beforehand, it's a rubber band every single time that I've ever seen in my career of what I've studied. I've never seen something that goes straight down with a setup like that or even similar to that and has no bounce. You know, there's a buyer and a seller on both sides, so there's going to be some disagreement on that quick movements, on that much snap, on all those holds, right? So
just think about how early you could have been and messed the trade up.
Right. And having that entry, it wasn't exact, but the high conviction with the entry in itself, everything else took care of itself. And I sold way too soon.
Yeah.
The thing went, I could have been a massive trade, and I'll remember it for next time, so, but I wanted to make sure to mention that. So we were talking about how do you mentally rebound, or did we already cover that?
I think we answered pretty much.
Yeah, I mean, after a bad day, a mental rebound for me is knowing that my process, my plan, and my strategy are consistent. I've proven it over the years, time and time again, during COVID, during a slow market, during a hot market. I know what I do works, and I know that it's shown. I've shown myself, I've shown you, I've shown everyone that it works. And if I stick to that, I know I'll be fine. There's parameters around it that if things go up and down or left and right or whatever, that it's going to be okay over the long term. So, I don't really... I learn so much more from my losers than I do my winners anyway. So if I lose, it's almost like a good thing, as crazy as that sounds.
Yeah.
Yeah. So it says this one's for all the mods. Here, you can ask some of the questions now, because I feel like I might be asking the wrong ones.
How many stats do you track, and how important is your opinion to track stats? Also, is it easier to learn a trading strategy once you have become sufficient in one strategy? What? I'm still writing on these. I wish I could have pre-read these.
Yeah.
Okay, pretty much it's asking what's your opinion on tracking stats?
Yeah.
How important is it? And then, if you're consistently profitable in one setup, when is the time to add another?
So for me, early on, I track stats. Now, I don't track stats as much as some people do in terms of Excel and in terms of, all that. But I have been tracking stats, I feel like, and falling more and more and more in love with stats recently. Because really, it's all that matters, Price action is what pays. Fundamentals, you can say pays too, but the only thing that truly pays is a stock goes up and a stock goes down, and you're there to take advantage of the in-between.
Yeah.
And so, basically, stats for me, I use in my, up top, the old noggin. But, in terms of Excel sheets and things like that, I don't have millions and millions of Excel sheets. I have some, I have tons of screenshots of charts is my version of Excel sheets, and I kind of look at them and I'm like, okay, this is what happened before, and that's going to help me project what's going to happen in the future. I take screenshots of charts a lot.
Yeah.
Jordan does a lot more Excel, and then we kind of intertwine on some of those things. But it's important. It's important to know stats. It's important to know how people react in the past, because
the bounce percentage stuff.
The bounce percentage is exactly, if a stock goes 100%, intraday, if it falls, what is it?
It's
50%?
pretty much if a stock goes 100% intraday, it's like a 75% chance that at some point it will bounce 30% or more.
Yeah,
just stuff like that.
There's a lot of that, and so yes, it's important to understand statistics, I think, because you can use that in your advantage, and that can then help you build conviction over a long-term time frame or a short-term time frame, and it just helps you size up more. The bigger conviction doesn't come from just I feel good about it. Conviction truly comes from all the time you've put in, and all the studying that you've done. If you're trying to say conviction is something where you're like, oh, I hope and I wish, then that's not conviction. Conviction is something that you've put in the time, you've looked at stocks, you've seen how they react, you've been in stocks that react, you've been in things that go up and down, and you've seen it time and time and time again. That's conviction. So then I use that for my conviction on stocks. So yes, it's very important, I think, to have some type of Excel, some type of screenshots of charts, and a ton of going back on TOS Tinkerswim on demand.
Tinkerswim.
Yeah. What about you?
I have pretty much the exact same opinion. I think it's important, but I think having screenshots of charts is more important. But I think the stats help a ton, because if you can build out stats that put you in the best stocks for you, right? So if you're really good at dip buying, then you should build scanners to pick up on things that are down 20%, 30%. For me, I found that like I'm terrible at trading stocks that are red on the day.
Yeah.
For me, it's stocks that are green on the day, holding consolidation. Point blank, that's as simple as it gets. So I built literally 3 I have 10 or 12 different scanners. I only look at 3. I just have the rest to kind of be background noise.
Yeah.
If something's really popping off, then I'll pull it up and just see what's going on. But if it's not on the 3 main scans, which is top liquidity leader, and then just a simple intraday gainer scan, and then I have another one that just picks up on anything over like 30% range.
Right.
Those 3, whatever hits that, I just pull it up and I scalp the range.
Yep.
So.
Yep. And you have tons of charts. I have tons of charts.
Yeah.
You have that spreadsheet and on what is that thing called?
It's
Spiky. Yeah. And we both go in between. We'll look at the stats on 30.
Oh, you just pull that up.
Yeah. Yeah. Just the other day we looked at trying to scan some mid caps, wasn't it?
I haven't made the actual Excel sheet for it. The spreadsheet on the website's ready, but I just need to organize it now.
Okay.
Well, no, I'm saying you can pull up the screenshot of like the market sentiment.
Where's that? Oh, yeah, there you go. We're going to pull that up anyways. Where was that?
I think it was in messages.
Oh, okay. We'll go like this.
Oh, there it is. It's right there.
Oh, okay. There we go. Cool.
So yeah, building out stuff like that is super important because, December, even the first 2 weeks of December, we were falling so behind on the runners. We should have been well over 80 for this month in December, but it was terrible. So I think the updated version is going to be like 40. But we should have paced out over 80. That was my minimum. Going from November into this month, I thought for sure we were going to get 80, and that's why I kind of sized up versus last month. But no, like it was still super slow. I mean, that's like, December versus last year. I mean, we're at 40 this year and we had 87 last year. I mean, it was like, yikes. So that was a moment where, if you look at all the November to December jumps on the previous years, all of them except for 2016 and, 2015, there's no liquidity back then, but, all of them jumped big month over month. So I was expecting the same thing, but it didn't happen. So that saved me a ton because there were moments where I was definitely in like a nail and bail mode versus like going for that home run and then giving back all the unrealized.
Right.
So,
okay.
I'm having trouble holding on to my winners and selling way too soon. What is a strategy to build conviction and let them run rather than grab low profits out of fear? For me, a simple rule would be like use higher time frames. So use the 5-minute as a guide. That's been helping a ton.
Not the 1 second.
Not the 1 second. So using the 5-minute as the guide, and then I use the 1 minute for the actual entry. But the 5-minute, if the setup is not on the 5, then I don't size in as much.
Yeah.
Because if it doesn't show on the 5, the longer a stock consolidates and traps, the higher it's going to go.
Right.
Sure, there's definitely pop and drop type moments, but if it's a clean 5-minute setup, for me, that's like an A+, and I'm going to size in. So for selling, a rule could be like trailing the 10 EMA on the 1 minute. That's like a Quamaggie style trailing stop. I don't really do that. Another thing is that you could sell half into the high day push. And then look for maybe like 1 or 2 more highs after that. Like I know a rule for you is like 3 highs and you're out.
Yeah.
So like 1 high, pull back, 2 high, pull back, and then the third one, kind of that last blow off top. Another one is if the stock is kind of lower volume, if I see a huge volume push come in, that's just way bigger than all the consolidation, I'll immediately sell because lower liquidity stocks are more prone to pop and drop. So.
Yeah.
Those are my sell rules for trying to hold a little bit longer. So
yeah. My sell rules to help me hold longer, is that the question?
Yeah.
Is when the market's hot,
yeah.
I let her ride, baby, and when the market's slow, I actually still let her ride. It's my weakness. But yeah. I mean, really though, if the market's hot. I'll tend to hold longer. If the market's not showing us consistent, 50, 100, 200, 300% runners, then then I'm going to just be there for the piece of the move and move. Like right now, I'm in the market mindset where I'm just there for the piece and I'm out, right?
Yeah.
We're not seeing those 1,500% runners. And so I'm just not going to take on that risk. But if we're seeing the DWACs and things, I am going to hold way longer.
Yeah.
So that's kind of what I'm talking about going into 2022 is, I got to when the market's showing us kind of like what the market's showing us that there's strength, then I'll be there to, make sure it's going to continue to ride with me. But if I'm not seeing the market strength and the market sentiment, then I'm going to take it off. So.
Yeah. What is your let's see yours. That one doesn't make any sense. So, can you talk about one or two short setups and how did you do this year shorting?
So, one or two this year's setups. What was that?
Yeah, like one or two setups that you look for on the short side, and how did you do shorting this year?
So one or two setups on the short side. I'd look for market sentiment where it feels like every day we're seeing a stock that runs, let's say 200%, 300%. The next day it's like 150%. The next day it's like 80%, and we're kind of getting that fade of just kind of like it's almost like a trading vehicle, and people are using it like that, and not really anything else behind it. And I'll just short kind of the day 3 of that. That's kind of like one of my best setups.
On like a blow off top or like a kill candle or?
It'll be up there within the probably 5 to 10% of the highs. I'll try and catch a little bit of the backside and then really start to jam it once it gets under, kind of that upper trend.
Yeah.
The uptrend of it. And another setup that I'll use is, maybe like a day like 4 or 5 in a row runner. And I'll try and start scaling in with smaller size and then try and nail it with conviction on the backside.
Yeah.
How did I perform in shorting this year? I was performing actually a lot better than you thought I was until GameStop came around.
Yeah.
And then that GameStop, that thing, I've never seen anything close to a move. I mean, this was after the big run and everything. And it went from I think it went from 50 to 89 intraday, and then I shorted it at 84 with pretty solid amount of size. All I was looking for was a move under 80. We went to like 80.4, and I'm up like 80 grand. I mean, I had pretty good size, I'm telling you. And then this thing just out of nowhere skips up to 100, and I get stuck at 92, 93, and I lose $500,000. In about probably 2 or 3 minutes.
I remember that. You were up 450 that day.
Yeah.
And you were red day recap.
Right. And so I don't regret taking that trade that much. I mean, I had the right idea. I was actually very patient with the short. I was 40 cents off my scale out. And so, I was up big, I was sizing big, I was in a hot streak, a lot of my trades were working out, and I felt, and I had the right idea. I would have been out, and then the only bad news is I probably would have reshorted maybe higher, and that thing I think went after hours to 190. It was incredible.
We've never seen it bounce like that.
No.
A dead cat bounce.
No, it was truly incredible, and if we're in that at 60 with the amount of size that we could have had, I mean, you could have made, I think, in that trade easily if you wanted to size up maybe 50 mil.
I think so. Yeah.
Because you could have loaded up at 60, sold it, let's say best case scenario at 140s. And liquidity would have been no problem. You're up almost 150, 180%.
Like the overnight, the first opening push. I mean, it's 2 million shares.
And it went to 220, I think. So I don't know if I could have held it overnight with that big a position, though. But
offering.
Yeah, exactly. So, but yeah. So I perform. But after that trade, I kind of mentally it really wrecked me. Yeah. So I'm gonna go into 2022. A little bit, maybe reshorting a little bit, taking scalp, small moves, taking, it's not like I haven't stopped shorting. It's just that one really hurt. Yep. And it's a rare setup. But, when you're going to short those stocks that can move and fly and rip, high average daily range type movers, anything's possible. And you do not want to get stuck in stuff like that because it can skip up quickly and you can lose your ass in a heartbeat.
Yeah.
So, yeah.
For me, since I trade like stocks that aren't trading necessarily $1 billion worth of liquidity a day, since my size is a lot lower, I can short a lot more of those pop and drops. I actually just shorted the other day TCAT. It was like such an obvious pump, and I just shorted pretty much dead top, and I faded it for like 50 cents a share. So things like that. As far as like the P&L, I probably made less than 100 grand this year shorting. It just really is not my focus, and I just don't ever see it really becoming a focus for me because the long side has just shown me so much possibility. I think when the market sentiment is slow, yeah, like being if it's a cheap borrow, because that's number one. A lot of these borrows lately have been ridiculous. Like, it's a $9 stock and the borrow will be 45 cents a share.
Yeah.
So if it's a cheap borrow, a couple cents a share, I'll grab 10,000 shares and I'll scalp it for just like a 2 or 3K wallet powder. That's about the extent. But I would say for me, a bread and butter would be like a very obvious like high day kill candle on something not trading crazy liquidity, because the fade likelihood on something that's not trading huge volume is higher. There's just not as much demand. So I would say that lower high short against a high day kill candle on something that is not a top liquidity leader. That would be a good one. And then the secondary one would be literally a wedge, but on the short side. If something taps like the lower trend line 5 or 6 or 7 or 8 times, once you get that final snap, sometimes you can hit it with like, if it's a higher price stock, especially, if it's $15 a share, you can hit it, with a couple thousand shares, and you can be up 80 cents a share in one candle. And then you just fade it for, like $1 a share, $1.20 a share. So
we've seen that plenty of times.
Yeah. So that's about the extent for me. I'm not really serious into shorting. If it's really slow, slow, then I'll short a little bit, but it's not my focus. So.
So you want to tell them about your little borrow situation that you got yourself into the other day?
Holy shit. Okay.
It was pretty funny.
So I reserved, I think it wasn't TCAT, it was something else, and I reserved 20,000 shares. Or no, 10,000 shares.
Was it CPOP?
I think so.
Okay.
It's something like that. And it was a cheap borrow, it was 2 cents a share, but on the trade zero, it glitched, and it did the borrow for $20 a share. So all of a sudden I saw $200,000 right there on my screen, and if I pressed accept, I would have been out at least 100 grand.
A heart attack would have happened.
And then, so I'm like shaking. I press the cancel button. I make sure everything didn't go through.
Wait, so you're shaking and then you press the cancel button?
I'm like, holy shit.
Yeah.
So I move the mouse over, I press cancel, everything, was all good. But then I re-borrowed it, and then it showed up as just $200, like it should have. So
I think they were just trying to scare you.
Yeah. So, yeah, that was... I don't know what the hell happened, but that...
Never heard of that, but that's nuts.
That would have been bad.
Yeah.
Okay, what is your rule for cutting losses? That's a pretty wide answer, or question.
It is. Well, in a hotter market, I might have a 10% stop. In a slower market, it's like 2 or 3%, generally.
That's the same for me.
Yeah.
So, I need advice on properly sizing up an account. For example, my full-size entries are $2,000, and my account is $4,500. For sizing an account, what we both did, I mean, if you have $1,000, you can't go in with 10% of your account like we do now. Now, with your account going into this year, it's going to be north of 5 mil in, soon.
Hopefully, yeah,
and for me, I think that my account by the end of this year will be 500. I was at 500 earlier this year, but I had to pull it just because the market slowed down so much. So now I'm at 300. But if you have a small account, you can't be reckless, but at the same time, you have to go all in. You can't move the needle with trying to turn 1,000 to even 100 grand. The 1K to 100K challenge, right? So it's like, I don't want to say you have to go all in, but from my experience, I would go all in with my account all the way pretty much until I hit maybe 60 grand. That was kind of my cap, and then I started slowing down from there.
Yeah. Yeah. So exactly what was that question again?
needs advice on properly sizing up a $4,500 account.
Yeah, so I mean, for me, like same kind of thing. I mean, it was like when I had $1,000 to my account, I wasn't trading with $100. You gotta move the needle quickly, and so sometimes I'd be all in on some stocks. It's just how it was. Now, the higher the size got, the less percentage obviously I would use over time, and that's basically the short story of that. So, when you have a small account, we're not necessarily saying go all in.
Yeah. And it has to be backed by real stats, real trades.
And going back to conviction.
Yeah.
Real conviction.
Real conviction.
Putting the time in and using that time to then give you conviction on a setup that's 90-10 for you, right?
Yeah.
So.
What's the best strategy you're currently using?
For me, it's sympathy plays.
For me, it's wedges. What trade are you... Oh, that's a good question. What trade are you most proud of for 2021?
That is a good question. I'd have to think about that for a second. Do you have yours?
For mine, it was INDP. INDP, it was a couple of months ago, and I was really working on the stats that I have now, where it's like, something runs up 70%, and then catching that secondary move. And on INDP, I only used maybe like a $70,000 position, but I made like $15,000, which for me is, that's like my top 5 trades, single trades ever. Because for me, a lot of my big days are just like these 5 or 6K.
Yeah.
But as far as a single trade, that was a big trade for me, and my biggest percentage intraday payout, at least with good size.
What's going on, Andrew?
And
Nate,
it was a perfect...
Alex Wartsky, what's going on?
It was a perfect wedge. Yeah.
Sorry.
Damn, shut the hell up.
Sorry.
Anyways, it was a perfect wedge. It fit the percentages, and I stuck to my plan. And the most satisfying part was that on backside, everyone got absolutely fucking destroyed that day. Like, everyone got destroyed. That was the day it went from 22, it went to like 8. I don't know if you remember that.
I don't.
It was the sickest fade.
Was that the 3-day runner?
No, it was day 1.
Really?
And so I topped it out with like my PR trade, and then at the end of the day, I won't name drop or whatever, but like everyone on Twitter got wrecked because it was a no bounce stock.
Huh.
So that's probably the thing I was most proud of, was nailing that, because that was the first kind of breakthrough mentally where I didn't just scalp it for cash.
And you felt like you kind of leveled up because everyone was losing.
Pretty much.
Yeah.
Because it was definitely like front side, backside. Because on backside, I think I nibbled at it for like a $500 loser, and I was done with it. But everyone else was like averaging down. I mean, you know how it is with some of those guys. Like,
oh yeah, I've done it.
Yeah. And I'm not going to name drop Cam the Scam. But,
yeah. That's me.
I'd probably say that.
Go Hawks. Okay. What's my most satisfying trade of the year? I mean, I'd probably have to say probably GameStop. Yeah. I mean, either that or IRNT. Those ones are both $1 million trades or close to it, right? I don't remember what IRNT was, but yeah. So either one of those trades, I think those were kind of my best. And a new goal is to have a $5 million trade this year.
Yeah.
And I think I can do it if the market comes back and if I start getting back into the rhythm. And it'll take a lot, but I think that it's possible.
Yeah. 100%. How many roller coaster days did you have this year? You want to go first?
Man. Well, the way I trade is roller coaster style. I mean, you saw my trade review.
Yeah.
And it's just like I could be red 300 and green 500 to close the day. So that was in the good times. And then the bad times was like, oh, this is just straight down. So yeah, I'd say, I mean, how many months have I been on a roller coaster? Or like what?
It just said how many days, but
sheesh, I'm gonna say months, especially lately. But over the past 2 or 3 weeks, I kind of got myself back into like what I know I should be doing. It's funny that I know that lot that I just bought is definitely getting myself back into that.
Yeah. Which is good if you can accumulate assets over time to kind of take away that cash so that you don't see fucking $6 million in the bank or some stupid number, right?
Yeah.
Being able to see like $1 million in the bank and then being like, whoa, like I can't lose 300 today, just like being sloppy. Like I have to tighten things up. I think that's So that might be the key.
It might be, but I just don't want it to be long term. I want to just have the Tom Brady mindset and like be sitting on a bunch, but still be able to perform and just fall in love with the performance and not really the okay, well, this is what I need, right?
Yeah.
And the performance is what I love the most.
Yeah.
That's performing in any sport or anything that I do is what I fall in love with, and then the rest will take care of itself.
Yep.
So.
And then for me, there was a couple of like days earlier in the year because I was trying to size up. January and February and March, it was so crazy hot. There were days where I'll never forget. There was this one stock, I think it was like, I can't remember the ticker. I had 300,000 shares of it, and it was like a 50-cent stock. And
holy smokes!
And
that doesn't sound like you at all.
No, I sized the hell up, and I made like a cent a share. Like I literally made $3,000.
Oh wow!
Well,
yeah, you were sized up. Yeah.
Well, okay, so after hours it went to 85. So
I think I
sat there,
that.
and that was the first time I really sized up and felt, holy shit, I could have made minimum. Because this thing, I mean, it took off. Because for whatever reason, earlier in the year, it was whatever was running big, and it was like a bottom bounce 50-cent stock. So that could have been easily 50 or 60 grand.
Yep.
And so that was the first time I was like, I felt the FOMO.
Yeah.
I was like, oh my God, what did I do type. Yeah. But there's been other frustrating days where, I'll chop myself out or whatever. But again, for the most part, my trading is super boring. And I want it to be that way. I don't.
Trading should be boring.
Yeah.
It should be, you fall in love with the process and you just stick to it.
Yeah.
And if you start trying to, I like making it fun. You don't want it to be fun. Trust me.
Yeah. So. Let's see here. Do you try to open and close most of your trades intraday and thereby eliminate overnight uncertainty, or do you swing trade?
So for me, I try to do intraday.
Is that boring? The question's that
intraday.
Boring.
Intraday, I try and do that where I just take it off. But I do, hold overnight more than you do, and that'd probably always be the case. I've made some of my biggest trades, like NCTY is my legendary first big trade.
Yeah.
Looking back, it's like wow, but I think I made $325,000 on that name.
Yeah. And I slipped like 80 though.
Yeah, I did, and that was back at the U stock trade days.
Yeah.
Holding that one overnight was definitely a just like a wow moment. Like that was like the market can do whatever it wants, and if you put yourself in the position, it will pay you.
That next day was my first $1,000 day ever.
Yeah.
Because that was pets.
Remember?
You were like on the plane.
I was on the plane, yeah. It went from like, didn't it go from like $1 to like $3 or something?
The roles were switched because I was messaging you. I was like, bro, you have to fucking get in. Like, this is such an obvious sympathy play. And then
I'm in the airport like trying to buy it.
Yeah, it went from like 130 to 5.
But I didn't really even care because at that point I was on such a high that I was up so much money. Because back then, that was a lot. That was...
Yeah, you jumped your account challenge from 700 to over $1 million on that trade.
Right.
Because you were on the way to the Trade Ideas conference, I remember.
Oh, yeah. And I was like, wow. Like, I felt like I had won the lottery. Like, to just... And I remember transferring it into my bank the same day. Because I was just like, there's no way this is real. Until I saw it in my bank account, I didn't believe it.
Yeah.
And then I saw it, and I was like, holy... It really did happen.
It's a sick feeling.
Yeah. And so... That was probably my top 2 moments in my career. Maybe my number 1. Because when going from nothing and then all of a sudden in one day I'm up $325,000, like I can't even explain to you the feeling of it felt like I said, like I'd won the lottery.
Yeah.
And I woke up and I'm like, no way is this at 8. No way. And then I'm selling it and I'm like, wow, this is really selling at 8. This is really selling at 7 or 6, and wow, what a feeling. So, yeah. What was that again? What was that?
Do you overnight or do you...
Yeah, so that was talking about my overnight. But yeah, I overnight and I swing trade. But mainly day trade. Overnight takes a little bit more emotion. And you're kind of like, at night, you're like, a little spicy.
Looking at it at 4 o'clock.
Yeah, and especially if you're sized up. But if I'm highly convicted, I'll take the overnight.
Yeah.
So.
For me, it's like 99.1 intraday.
Yeah.
That will change though. I do have goals for 2022. I'm thinking that I'm going to be funding a Robinhood account with 10 grand and use that as a swing trade account, because emotionally I'm to the point now where that is a dollar amount for me that if I lose it all, I just don't care. You know?
Yeah.
So I think that's going to be a good starting spot. But the tough thing is if that thing grows to 50 and 60, then just even a 50 or 60K position overnight, I feel like I'd still be kind of like nervous. So
right.
It's just about each one of our personalities. Definitely overnight you can freaking make a ton.
For sure.
But I mostly intraday.
There you
go. When you started out, before you had enough for PDT, did you swing trade to reach PDT, or did you use a cash count?
Before PDT, I was overnighting a lot.
Yeah.
That's what I used to help me to get through PDT, because you could buy a stock at the close, sell it at the open.
That market too.
Yeah, sell it at the open, and it wouldn't count as a day trade. So it's a way of trading that I really learned a lot during that time frame, where I was just like overnighting almost every day, trying to figure out that. Now I'm not quite as good as overnighting because I don't focus on it as much, but back then I was dialed into overnights because that was my way through the 25K.
Yeah.
So
for me, I never had to deal with under PDT. When I first started in 2018 blowing up little $100 accounts, I was on stock trade, and it was actually good at the time.
Yeah.
And then 2019 rolled around, and that was my first full-time year. So I funded a Robinhood account because it was free commission. I funded it. I think I spotted like 14 grand, which is literally my entire. I think I had like $500 in my bank account left after that.
Yeah.
And then my parents spotted me the rest to fund it with 26, and then I treated it as a 1K account.
Yeah.
So that way I could do it full time. I wasn't limited. And honestly, the more trades you make, the more mistakes you can make that you can learn from. So for me, in the way that I trade, had I been under PDT like what you did, there's no chance I would have been where I'm at now. Like, it sped up my learning curve a ton. So, for me, I never had to deal with PDT, so I can't really relate. So
okay, yeah.
Do you recommend crypto for beginners or for anyone at all?
That's a good question. Crypto, I dollar cost average into. I do about $2,500 every week. $1,750 goes into Ethereum, and the other $750 or $700 goes into Bitcoin. So that's how I've been doing it for about almost a year now. And do I recommend it to everyone? No. But there is great range and volatility in those coins. And I do have an account that I use to just screw around in that I've taken, I think it was like $3,800, and it's now at about 11 or 12 grand. Just screwing around into it.
Like some shit coins that run like
Sheeb I was in. Yeah. Right now I'm in CRO. And when that market gets hot, I want to have an account, open. But yeah, so definitely one of those things that like, it's the same stuff. It's the big rippers, big runners, big sympathy plays, and I want to be there. And I can make a ton of money if it starts getting hot in that area. So just trying to grow that account. And so, yeah, I'm there just in case. But do I recommend it to people? The coins, I don't know a ton about. I would say it's something to explore. There is opportunity there. But I don't know enough to say that it'd be, like exactly like small caps. But I'd say probably pretty similar. And if you want opportunity, it's there. But it's going to be tough either way. So that's mine.
Yeah, I'm not really into crypto, so.
You fell out 11 one day.
Yeah, pretty much.
Yeah.
Tried to day trade some shit coins, and I lost I think it was like $200, and I was like, this is stupid.
Yeah. It's going to take up too much of my time.
Yeah. When dip buying, what are your sell rules if there's no bounce? Is it a percentage value? Is it a percent of value? Thanks in advance. So like no bounce, what's worst case? Like if it just fails, keeps failing.
If I'm trading well, I stop out quickly. If I'm trading poor, I'm holding, and that's what I did with BTX. Yeah. Never will I forget that name. But I learned so much.
It's like saying Voldemort. I
can't say that name anymore. People bring it up. I'm like, please don't mention it.
Makes him sick just talking about it.
I know. I'm getting more and more sick as we speak about it.
my dip buying rules, I don't really buy panic dip buys that are red on the tape. So, holy shit.
I know. Sorry, man.
So for me, I'm typically, my dips are high or low, so I always have a risk off spot. If it breaks trend, I'm out. So that's about it. Liquidity aside, what is the single most important aspect of your criteria that must be present in order for you to take a trade, and why is it so important in your strategy? There's so many different strategies, it's like tough to answer.
Yeah.
I would say the most important criteria on a wedge is just green on day. If it's a 20% intraday gainer, green on day, sideways consolidation, forming trend lines. Simple shit.
Yeah.
For me at least.
And you stop out quickly.
Pretty much.
If it breaks down.
Yeah, if it breaks under like the 5-minute high or low, let's say like it just keeps stair stepping, right?
Right.
If it breaks one of those, I'm out. So.
Okay. Should we answer some live questions? Just a lot more.
Sure. There's like 5 more.
Okay.
We can make them quick.
Then we'll answer your guys' questions live because I know a lot of you guys have been asking questions. So feel free to start.
Re-ask them.
Yeah, re-ask them.
What books have you read? You're into books more than me, so.
Well, number one books I read is Hunter Bagger and 100 to 1. It studies stocks that. Excuse me, sorry. I had a little burp.
I was like waiting for that.
I know. Hunter Bagger and 100 to 1 is the books that I'm reading currently. It goes over stocks that have gone up, 10,000%, and it covers all the statistics. And I just really wanted to really get an understanding of like what to look for when in looking at long term, or even for a year swing trading, and what goes up 1,000, 10,000%, and what kind of criteria should I look at. And those books really help me. I'm not done reading them. I've read them both, skimmed them, like the nutrient stuff. Like I've read probably 50 pages of each total. Well, let's say 30 pages of each total. But I got to go back through and read it from front to back when I find like a time where I can just soak it all up. And those are the 2 books that, I like finding stocks that perform at a very high clip, and I will always be like that. High ADR, big price action, that's my type of style. You can make big money quickly. And in long term, 10,000% in 5, 10, 15 years, that's tremendous.
Yeah.
So learning that was the biggest thing for me. So I'd say those 2 books were, and then I would also recommend a Peter Lynch book, because he started with a small amount. I think it was like $50,000 or something.
I mean, I feel like it was more expensive to trade back then.
Yeah, but I know he turned 18 million into 14 billion in like 13 years.
That's ridiculous.
Right. So, but that's a mindset that I want to learn from because I'm at that stage now.
Yeah.
And so maybe something like that too. Anything for you?
I suck at reading, so for me it's YouTube. Paul Maggie, Cam. Can I shout out different?
Yeah, I don't care.
Investors Underground. If you want to know how to sell into high day, Warrior Trading.
Oh, okay, we're gonna name drop.
Matt he's got awesome videos. For tape in level 2, Matt as trader, and then Steven Ducks for shorting, Tim Grattani for shorting, and also reverse engineering why they don't short. That's crucial because if they like Steven Ducks, if he explains what he doesn't short, just play that on the long, like something that's crowded volume and all that stuff.
Yeah, that's why he was kidding about Warrior Trading.
Yeah, I was just kidding.
Yeah,
jokes.
But
yeah. So
yeah.
So okay, second question. Why is Warrior Trading so good? No, I'm kidding. As you pass your first million, what were your weaknesses when you first started trading, and how'd you get over them?
Why? So ask that again. I guess I'm kind of.
So as you passed your first million, what were the key differences what were the key differences between when you were kind of struggling and then when you passed your first mil? What was your biggest weakness coming up, and then how'd you conquer it?
My biggest weakness coming up through the million or to the million was, it was. I think it was. That's a good question.
For me, it was probably stock selection. To hit the first mill, the scalping was like very important, so I was more focused on things with range. But at that time, since the market was so hot last year, I was playing a ton of sympathy plays, so I learned that a lot from Cam. So for me, that was kind of the biggest thing. You're only as good as the stocks you trade. You know, if Qual Maggie trades something at 52-week lows, he's not going to make any money, even though the guy's making, 60 mil a year. He has to trade the right stocks with the right criteria. So, you can't, you're only as good as the stocks you trade. So that was pretty much, I think that was really big for me.
Yeah. My biggest weakness going to the million, I would say, was probably over trading. And then after mill?
I mean, just up to the mill, because once you cross the mill, and it becomes like,
Not relatable?
Well, sort of, yeah.
Yeah. Well, but I would say after a mill, it's just been...
At that point, it's perfecting it, but up to a mill, then that's the grind to really find what you're good at.
Yeah. I'd say probably over trading.
Gotcha.
And then after the mill, it probably...
It's too much conviction.
Just being too comfortable.
Yeah.
And being complacent.
After archiving a few stocks for the month of December, which had good liquidity, I found that the trend is your friend. Did I just get lucky this month, or is it always like this? Yeah, I mean, trend is your friend. The most liquid things are typically going to have the most opportunity, dollar-wise and percentage-wise. So
yeah,
that's about it there. What to do when you have a solid play right in front of you, but you don't get filled by 1 or 2 cents and miss out on the big runs. And then on the flip side, okay, just answer that.
Sizing down is a big thing. If you're sized up and you miss it, you're going to be like, oh my gosh, I could have made this. Yeah. And your emotions are extremely high and you probably get FOMO. If you're sized down mentality, you're like, okay, I was going to get a couple $100 and I would have made, $10-20, great. If you were trying to size up at like $100,000 and you're sizing up and then emotionally you're just too intertwined into missing out, then it'll screw you up and you'll start chasing it and probably get stopped out on, and it's just an ugly little trend thing. So
yeah,
that's what I would say.
Yeah, I'd say. I mean, that's pretty much the same thing. Yeah, too much size and you'll get way too much FOMO. I think that, however, though, if it's an A++ and you have to hit in 5 cents higher, then I'll do it. Mm-hmm. Like if it's an A+ on the 5 minute and it maybe doesn't dip to where I preferably would like it, there's times where I'll go with maybe just half size. But there's definitely times where it just happened to me the other day. Like if I got filled, if the stock went literally 1 cent lower, because that's where my bids would have started to fill, it would have been a PR trade, and none of them filled. It just kept stair stepping. I was waiting for that kind of knife before the run.
Which one was that?
I can't remember.
Okay. Doesn't surprise me.
Yeah. But yeah, I mean, depends on the setup, but in the long run, you have to remember that if you wait for your entries, it's going to be the best. If you get FOMO and you chase something and you get lucky, long term, you're not actually going to get paid. So
right.
All these are Jesus.
So should we just do live?
Yeah.
All right. Do you guys have any questions for live? How do you have a YouTube live and not look at live questions? Well, now we are. You have answers. Yeah.
We had a bunch of questions in the chat room, like podcast questions.
Oh, did we?
So.
Let's do live though.
I wrote them all down.
Delete. All right. Any question? Oh, YouTube. Sorry, I'm back on YouTube here. You guys can go to the lounge room and ask questions if you're here, or YouTube, but I'll most likely. After you became profitable, did you stop studying 8 to 12 hours a day? I would say yes and no. Like, I still study. It's just different. And also, it's time to enjoy my life a little. Like I don't want to be the Elon and like I said, the Warren or the Elon or the Jeff or, I want to enjoy my life a little. So I'm not quite as entrenched, but I would say I'm still studying, on average per week, maybe 5, 10, 15, 20, I'd say, 30 hours, 35 hours a week studying. Whether that means YouTube or looking at charts or watching the scan,
My studying went way down.
You were very, very...
I'm very all or nothing.
Yeah.
So, on the grind up, it was like, no exaggeration, it was 12 plus hours a day.
Yeah.
It was 6 to 9 or 10, or sometimes I'd like even go to like 2 in the morning. I mean, it was stupid. So
yeah,
it worked. So I can't knock it, but my studying now per week, I mean, I run those spreadsheets when it's important, but I probably study maybe 8 to 10 hours a week. I mean, it's pretty minimal now. So.
Well, and I'm also using like the intraday time as well as some study.
Oh, I thought you meant outside hours.
No.
If that's the case,
because I think the most important way to learn is watching live price action.
Yeah. Well, just outside of trading hours, then that would be like, just 8 to 10. So with trading hours, I don't know, pretty similar.
Yeah.
30.
Okay. Jordan mentioned in his August review that he was more comfortable looking at negative P&L, which is needed. To grow, have you taken more paper cut and small losses that you were in before in order to potentially have more gains? What he's trying to say there is that, you have to be able to look at a big red to see a big green.
Yeah. Yeah, I'm just getting more comfortable with not panicking out on the dips. So I always have a risk-off spot, but typically, even within my risk-off spot, there's times where I'll panic, and I'll get chopped out. Now, it's that problem, fortunately, is becoming less and less, seemingly every day, because the cushion is there, and it just becomes, you just look at -2 or 3 or 5K enough. I mean, like, your first time looking at it, it's terrifying. Your 100th time or 1,000th time looking at it, it's nothing, right? So
Right.
Just getting used to it.
How do you prevent getting stopped out before the run? What I do is I size in small, take a tiny little starter, and then once the chart, because I might have conviction in the setup, so I'm like NTRB for an example. NTRB, I got a starter at 11.50, a tiny size, and then I sized the hell up at like 9.98, 10.05, 10.50, and I brought the average down to like 10.60 or 10.58, something like that. I was highly convicted in the stocks. I knew I was going to take an entry on it. I was looking for a bounce, and I was just trying to be patient and wait for my size up. So that's how I avoid getting stopped out. Size it small and then wait for the setup. That's what I use. I use somewhat trailing stops, but that's more of like, not really though. Is studying just reviewing charts? It's a big part of it. Like I said, price action pays, so studying charts is everything, When you see a chart go up and down, that's what paid or lost people money. So reviewing charts is one of the biggest things to look at, even if it's in the 90s or 80s. I wish I could find those more often, but you're welcome, Mo. What do you think should be a percentage of the account that you should risk per trade? Like I said, hot market, I'm risking 10% most likely, and a slow market, 3 to 4%.
For me, it's like slow market, 1%, hot market, it's like 3%.
Yeah.
But that's because we got big accounts now.
Yeah.
And before it was
more
20%, 30%,
yeah.
And for you it was like, shit, you go at 50%.
And maybe I'm more like 15% and 5% kind of. I don't know. If you knew what you know now when you first started trading, what would you have done differently? If you knew what you know now when you first started trading, I would have taken smaller size in the beginning. Because I lost a lot in the beginning. Yeah, I lost a lot in the beginning. I lost about half my net worth, and that almost brought me out of trading. I mean, I remember saying the words, I quit. And mentally, I just didn't allow myself. I told people I wasn't going to do it anymore. Lost half my net worth, and that was because I kept adding to my account. Excuse me, and then I remember just, getting that, just terrible depression type, like, down on myself. And ever since that day, I never looked back.
Yeah.
So, what about, same thing for you, or?
What? I forgot the question.
If you knew what you knew now, you first started trading, what would you have done differently?
Nothing. I mean, I went as hard as I could at it. I couldn't have done any more than I did. And I wanted it to be that way. I wanted to be able to look back and say, like, I couldn't have studied any more than I did. So I really don't have any regrets because it is what it is.
Yeah. How was your first trading year? I lost half my net worth, said I was going to quit, worked extra hours at Domino's Pizza, and then I never looked back from there.
I lost like $1,000, so that was like maybe 12% of my net worth. And then 2019, I made like $6,000, and 2020 took off. So
yeah. What do you mean by reviewing charts? We look at Thinkorswim on demand, and we're just finding any charts to look at, with high volatility, high range. What would be your 3 most valuable piece of advice to beginner traders? Number 1, perfecting entries. Number 2, sizing way down, and number 3, would be studying more. What about you?
3 things as a beginner trader.
The most valuable piece of advice to beginner trader.
Study a ton, screenshot charts, because I couldn't tell you how many times I can pull up charts from 2016, 2017 that tickers that you can't even look up anymore because it got delisted, but we can still go back and look at those old runs.
Yeko.
Yeah. Is it not YECOF anymore?
I don't think so, no.
Yeah, so I mean, stuff like that. You may not make anything now, but if you screenshot the charts and put in the work, that will pay dividends once you actually do find your stride, because then it'll just compound your growth that much more. So,
okay.
For me, it's really just number 1 is just screenshotting charts.
Right. My favorite chart setup, Jordan's, is a wedge. Mine is like an intraday consolidation with high ADR, high average daily range. Jordan, when you say you used to study 10 plus hours a day, what did you spend most of the time? Videos, books, tracking?
So no books. It was, I would watch the recaps of everyone. I'd watch Cam's. I would watch, at that point, like TTG, I would watch Warrior. Mm-hmm. I would watch everyone's recaps. I also, back in the day, people used to post their prints, like Short Bear, and that was, like, invaluable, seeing the actual prints of these guys making, like, $500,000 a day, because you can see exactly where they're getting in and out. So I would screenshot those. I would listen to Chat with Traders podcasts. I would, majority of the time, I was going through, and at that time, I was actually doing, by hand, I was tracking, like, intraday bounce, gap percentage, market cap, float, looking through the filings, like I was news. So I was having to do that all by hand. So that took up a ton of time. And then it was screenshotting charts using the on-demand feature, going back in time. And then, like, at that point, you could actually watch the live tape. So that was sick.
Yeah.
So, yeah, that's just all day. And there is just endless content because it wasn't just that day. Then you can go back 2 years ago, of watching those old videos, and I mean, I couldn't tell you. I couldn't tell you how much time I've spent watching YouTube with trading stuff. So.
Right. How was a second trader cam? He present himself? What does that mean?
Oh, like my face. I know.
How is the second trader?
How is the second trader cam?
I don't know what that means. Anyways. 1K to 10K public. Yeah, I already did that 3 times. Do you think scanners are worth it? Yes, I do think the scanners are worth the money. I mean,
even Qual Mag, you can't trade without it. So.
I mean, it's invaluable. You need something to spot ideas for you. I use Trade Ideas. We both use Trade Ideas. It's what works for us. It's not necessarily end all be all, but I've tried other things and it's just not as good. I really like the voice that I don't even have to look down. We have criteria that helps us. So. We wouldn't be offering it if we felt like it didn't help. Jordan is a second trader, I think. Should I take a screenshot of the entire chart? Yeah, that's what I do.
Yeah, just end of day. And now what I do, the lazy version of what I do now is I will just go on my phone and I'll screenshot it on my phone and then I'll just put it in a photo album. So
Yeah.
now I can just flip through, and it takes 2 seconds. I don't have to go on my desk. I don't have to use the snipping tool. I don't have to do anything. It's just right there.
Okay.
So.
All right, guys. That's basically it. It's Jordan, the educator, in the room. What do you think, Scanner? Yeah. So that's basically it. You guys have any questions before we go? We'll answer like another 1 or 2 questions, then we'll be heading out. Do you look at only a? No, we look at multiple time frames.
Yeah.
Yeah, it's
daily, 15 hourly.
Yeah.
5 minute, 1 minute.
1 second.
10 seconds.
I don't look at 1 second. He does, but
I did for a couple days.
yeah. You can still. I mean, whatever works. Do you look at a time frame? Do you think? Okay. Got any other questions, guys? Does Jordan have a Twitter? No, he does not.
Nope. I'm off the grid.
He's off the grid in every kind of way. No face.
Just my voice.
Yep.
Cougars.
The banquet beer on Cam's Discord. Yes, he's on my Discord. Yep. Best advice for 2022. Make every day better than yesterday. Every moment you have, make it better than yesterday. It doesn't matter what you're gonna do. Just don't half-ass it all the way. Does Jordan even lift, bro? No, he's actually smaller than me. It's unfortunate.
Let me cover my face real quick. I'll mog you real quick.
Thank you for both of all you're welcome. The giveaway winner. I'll probably announce those in the next couple days. The giveaway winners. Truly appreciate it. You're welcome, Sean. Trade Zero, is it good? Yeah, I love Trade Zero. Their executions are great. Great shorts. Yeah. Well, tell Jordan I appreciate him. Inspired and dedicated certain setups. Yeah. He appreciates that, I think.
Hey, you're welcome.
What will happen in a slower market? There's always runners. What happens in slower markets? I just size down. You're welcome. Love this talk. Brent, it won't be a regular thing, but we'll maybe work on making when I get
at the house.
maybe a new place. We'll make it like maybe once every month or two, and maybe get some more people on. Any good trade scanners? We have them on the website. What do you think of Lightspeed? They're all right. Let's see the house. Currently, one of the homes is still remodeling. The other lot we're building out currently. So nothing to see currently, but we'll keep updating you. Thanks, Cam, for your recap. You're welcome. Glad you guys are taking a lot out of it. How to control emotions? For me, I just slice down. What's going on, Drew? Matt Weasel, what's up? All right. Anything else?
Yeah, make 2022 the year that you finally pull the trigger, go after it. 1 speed, and that's full speed. Just honestly, if you're gonna do this, we both had the same mentality. It was 100%. And if you really want something, it doesn't even have to be trading. I mean, it could be anything. If you want to go after a business that you're building, if you want to go after that promotion at work, whatever it is, the gym, just go after it 100%, because
there's no reason to go 80%.
Our time is everything. Yeah. That's the one asset that no matter how much money you have, you can never buy back. So make the most of your time. If you need to be selfish this year, and build yourself up now so that it'll pay dividends down the road. I mean, just really make 2022 your year.
And there's you're just cheating yourself if you're going 80%. And I get it. The first 3 months are easy to do that, but let's make it a full year thing. Yeah. Other than that, let's make it a great year.
Yeah.
It's Mercer is going to be great, and the lot's going to be great. Yeah, we're going to be neighbors. We didn't know each other before. We played golf together in junior year of high school. And the story behind that is pretty simple. He saw what I was doing, thought it was great, tried to do it, learned from me a little bit, and here we are. So 19 Brady's are still on. That's awesome. But that's it, guys. So I appreciate you guys for coming on. We'll see you guys, I don't know, in a couple months. Maybe we'll do another little, maybe quarterly recap. I don't know. We'll kind of see how it goes. But until then, guys, appreciate you guys for subscribing to the RomanticNoTrading.com community. Cheers, team. And